in 6 to 12 months from now, because that's part of the founder's journey to discover and to iterate even the monetization models.
Right, absolutely. I think that kind of changes, right? It has to evolve.
Correct.
So that is wonderful to know that is, these are the factors that you feel are going to be perhaps contributing factors for the success of a startup. And I think this kind of remains the same, no matter what part of the cycle you might be in. This is very foundational stuff, and that kind of cuts across different sectors as well. Perhaps not so much the
Correct.
community part, but just ensuring that you perhaps say have a wait list, or say have a few early adopters in line already, who are ready to perhaps test out the product. This is something that works across Web 2 or Web 3.
Absolutely. Some of the shrewd entrepreneurs go also by the narrative to say that, hey, I will only build what the current narrative is being spoken on the market. So we have also seen some entrepreneurs take this route to say that I will just go with what's being spoken about, what's being trending. So we have seen short-term success in these models, where eventually these founders go and end up either shutting down after some time, or go ahead and pivoting and building out a more tangible company. Right? So we have started to see that trend in the last bull cycle. We are beginning to see early signs of that trend in the current cycle, where people are chasing narratives, and so narratives are driven by where the money is being spent today. And so you start going ahead behind the narrative versus going behind actually trying to solve a unique problem. So so as an entrepreneur, you got to find your shoes, that which shoes you're going to be comfortable in.
Absolutely. I think there is no right or wrong here. It's more that which hard are you choosing? Like both the journeys can be hard in themselves, but what is something that is perhaps more suitable and more aligned to the vision of the future that you want to build?
Yeah.
So as the landscape, in Web3 continues to evolve, and it evolves very rapidly, what trends do you foresee shaping the future of the industry? And how is Foundership adapting itself to stay ahead of the curve?
Fantastic. So I think in the last 30 days, what we have seen is the ETFs getting launched on the Bitcoin is a big signal that you will start seeing a lot more money and liquidity being accessed by the large funds, and large funds coming into Bitcoin is a signal that this industry is going towards within the next 10 years, you will see this becoming a norm rather than being seen with with a strong lens, right? So this is going to become regularized in the next decade. So this means a lot of enterprises adoption will kick in, a lot of use cases will kick in, which we saw last year during the bear market. A lot of brand loyalty programs had started to adopt building out loyalty solutions around blockchain. So this will only accelerate. You will see a lot of banks. We believe a lot of banks and financial institutions will also start offering a combination of Web 2 and Web 3 solutions for you and I as banking customers. So this will increase not only adoption, but this will also increase the very need on how do I manage a single bank account, which will manage both my fiat and crypto requirements, right? And how will now wealth management take place, inheritance take place, laws changing in different jurisdictions across the world. So a lot of these changes are going to come in, and the moment banks come in, you could say it could be the end of crazy bull cycles, but you will start seeing a lot more stability coming into these into the crypto worlds, is what we see happening towards the end of the decade. But that conversations have started. You'll find a lot more consumer awareness being done, lesser of Ponzi schemes, lesser of scams being taking place, because technology will evolve. The moment a Web2 company comes in, a lot of compliances will have to follow in. So we see the early signs of this going towards getting regularized across different jurisdictions. And hence a lot more use cases, a lot of startups opportunities will arise to do this. And when will this happen? While you see the enterprises starting to take shape and form, but we see towards the end of this decade, a lot of these things will fall in place. And to do this, one is Foundership is is continuing to invest with early stage startups. Sometimes we learn the narratives from what the startups are building because we have an active capital ecosystem network. We get to hear what are the areas that our capital partners are looking to invest in. So we take in inputs from a lot of these perspectives and iterate on our own theses as to say that RWA is something that we are going to look at very strongly. We're going to look at infrastructure very strongly. Loyalty programs is something that we have been very much looking at. Gaming is something that we see because even till today, Web2 gaming is continuing to be a multi-billion-dollar industry. And a lot of these Web2 gamers will eventually come to Web3 in adopting it and exchanging their digital assets in different shapes and forms. So these are broadly the four areas that we strongly look at. And as other areas come in, we'll be happy to learn from it and take in startups and grow them from there.
Right. Okay, that is very, very insightful. Now, coming to collaboration and community, basically these seem to be very integral to the ethos of foundership as well as Web3 as a whole. How
Right.
do you foster a supportive ecosystem like of Web3 founders, leaders, investors, developers within your network? Because this is like a problem I think all founders face at some point or the other, that the community is not engaged enough, or it's not value driven perhaps enough. So how do you keep those checks and balances in place to maintain the ethos with which you perhaps founded Foundership?
Right. This is always a tough question to ask because community initiatives are seen over longer periods of time and they are never an immediate ROI. Because it takes repeatability for people to build trust in your community, and once trust is built, that's when the network effects kick in to say that, hey, this is a great place for me to either learn, this is a great place for me to network, this is a great place where I don't get cheated or don't get taken for granted. So,
Right.
we at Foundership, we strongly believe that community activity is something that everyone should feel at par, right? So equitable as a philosophy is something that we believe and we drive consciously in everything that we do. In everything else outside of community, our entire focus is always founder first, right?
Right.
So if you are expanding our ecosystem, why are we expanding the ecosystem? Because founders will benefit. If you are expanding our partner ecosystem, who's going to benefit? It's the founder who's going to benefit. If you are expanding our capital network, who's going to benefit? It's the founder who's going to benefit. So our why has been laid out very strong, that we exist for our founders, and the community and the ecosystem is required for the startups to succeed. And when the startups succeeds, everyone succeeds. So
That's true.
Our entire why revolves as our beacon, and that beacon helps us to always have conversations in this context to say that, hey, how can we create a win-win-win across three different stakeholders, right? A partner, startup, and foundership, right? So these are the three stakeholders when it comes to a partner. Between an investor, it is investor, foundership, and the startup. Between a community, it is community, either a community leader or community participant, foundership, and the startup. So in all aspects of this, the moment you keep our founders at the center of it and rally the entire ecosystem around it, that is when we truly believe that everyone benefits over a period of time.
Right. Yeah, I think that is absolutely true. And, creating basically more value for startups. And ultimately, what you
Yeah.
said, I think this is very quotable, that ultimately when a startup wins, everybody wins. So just
Yeah.
making sure that that value is being delivered day in and day out becomes the very spine behind any community that kind of seems to be able to sustain itself and on a longer period
Absolutely.
of.
Yeah. So
Yeah.
there's a fundamental difference between how we approach community building versus a product company or a solution company approaching community building, right?
Right.
If you're an exchange, you're building out a community to increase awareness about trading, so that eventually all this knowledge will result in more trades and more user onboarding. Right. So every community building has to have a strong why, and long as all your activities and decisions align to that why, there is no reason as to why you will not see all your metrics being met over a period of time. But if you try to look for metrics within every month, in my opinion, that's a wrong way to look at it. But when you look at metrics over each quarter, you will start seeing the numbers adding up.
Right, right. I think that is absolutely true. You have to be obviously patience is key here, and
Right.
that is something that you one does need to have if you are going to be looking at building something that kind of stands the test of time and is sustainable because it doesn't happen overnight, right? An overnight success is like 10 years in the making.
Right. Right.
So many startups at the moment they struggle, and even in general, I think, and they struggle with fundraising and attracting investment. What would be your advice to such founders who are looking to secure funding for their project?
I think what we have seen is catching on to that narrative and your problem statement. So many times, if you don't make the listeners, especially investors, if you don't make them fall in love with the problem, you have lost the battle there.
Right.
And this is something that we very strongly emphasize at Foundership as part of our fundraising coaching sessions is first go very deep in understanding the problem that you're trying to solve and how do you articulate that problem. Because if I don't understand or relate to the problem statement, no matter what data, what content, everything that you narrate later is of no consequence.
Yeah.
And investors are also pretty much like your buyers, right? So there is a tendency or there is a leaning towards emotion versus just hard data. Yes, data is important, but that last 10% decision or the 20% decision always goes based on emotions. And that emotions are driven by FOMO. Emotions are driven by uh, on how big is this opportunity going to be, how well you articulate that this problem can really become a big problem and this solution is going to be a multi-million dollar solution. Is in a crux on how you communicate with your investor. Because end of the day, I as an investor, I have what are you trying to do as a founder? I'm trying to communicate to the investor to say that instead of you putting $100 on another project to take a bet that it will become $10,000, put this $100 in me because I'm the right horse to bet on, because I'm going to make you not only $10,000, but I'm going to convert your $10,000 to 100,000 or even a million. How are you going to make that million is the story you got to narrate and convince the investor through your storytelling, through your fundraising pitch deck, through this process. And if you get this act right, you will start seeing investors being comfortable to invest in you. And in early stage, it's all about your credibility, your resilience, your perseverance on how well you're able to communicate this narrative to the investors and show them that you're not going to be a fly-by-night operator, but you're around here to build a multi-million dollar company.
Right, absolutely. I think that is very, very important. Just the diligence, the sincerity, the vision, it gets translated well in the deck. Because at times founders kind of get too close to their own idea and their vision, and they're not able to perhaps portray that very well. And that can be obviously their undoing, and they are not able to then get the message across and not be able to secure funding. I think, like we mentioned before, there is liquidity available for sound projects that will perhaps are utility driven, will stand the test of time, will get sufficient traction and increase adoption of Web3 in general.
Right.
So now, we are almost like short on time, but I would love to ask you if there is any success story from one of the startups that have gone through your program that you can perhaps share with our listeners.
Yeah, absolutely. There are a bunch of them. I think because now close to 10 of our portfolio companies have raised funds, as being part of the Foundership program. And in the last 15 months that we have seen, it's not been an easy journey for any Web3 startup to be around and to raise funds. But nevertheless, some of them have gone ahead and done that. So we have Zot, who is building out a DeFi platform for RWA. We have seen Book, which is in building out, again, time-sensitive real-world asset marketplace. For example, you could tokenize your hotel room bookings and trade it off secondary and so on. And I've got Circle of Games, who's been successful in both securing grants and also in raising funds. We will soon have some announcements coming around some of these shortly. We are waiting for some regulatory approvals to come in. But yeah, so these are some of them. And in our current portfolio, there are some active conversations going on who are raising funds. So some of these startups came into us with an idea on paper when we were very early on. Some of them came with an MVP. One of the startups went through a founder exit. Then they were able to find another co-founder. So we have had startups who have gone through some real challenges in terms of their ability to execute, their ability to stay focused, and yet build a very strong, understanding of the problem statement and making the investors realize that, hey, we are true to our nature as founders, and we are going to build out a large business, and this is an opportunity for you to be part of the journey or miss the ride, right? And that's how some of these guys have gone ahead and been able to raise money, even in the last 18 months, which has been a tough market to operate and to raise.
So now, I think, we've kind of covered all bases when it comes to entrepreneurs and their startups and, what Foundership can do perhaps to help them. Looking ahead, do you have any kind of milestone in mind when it comes to Foundership itself in the coming years? What is the kind of impact you envision your work having on the broader Web3 ecosystem?
Yeah, absolutely. As Foundership, one of our logical steps has been, putting our energies towards putting a fund together, because currently we do not invest, and that obviously has certain challenges. And we believe our ability to invest when we start a cohort will dramatically change both the outcomes and the expectations of an accelerator as well. So this year is going to be our focus on getting our fund together, where we'll be able to write that first check and believing in the projects that we back them to the hill. Second is, this year we are also expecting some form of a bull cycle to come in. So let's see how this year spans out. So we hope it'll become a lot more easier for some of the good startups to raise funds with liquidity coming in as Bitcoin inches more towards the 50K and eventually goes beyond the 60K mark later through this year. So those are the signs that we are looking for in terms of easing investor access to look at projects, to put in the first check and also come in for follow-on rounds. If as and when the bull market starts, we'll see a lot more projects going ahead with token launches. So that will generate a different form of liquidity than just equity investors coming in.
Okay, yeah, I think that those are wonderful milestones. I can't wait for you guys to hit them. And I think knowing the team that you have, you would reach there in the time that you kind of have stipulated. Now, Bimlesh, because we are out of time, I would love to ask you one question that I ask everybody who comes on the show. You made a leap from earlier tech days, Web 2 to Web 3, and now that you are in Web 3, what is the kind of advice you can perhaps give to somebody facing the same dilemma, whether they should make that change, whether they should take that leap, and truly for them to start living on blockchain? What would be your 2-3 suggestions for them?
Sure. I think if you're a first-time entrepreneur and have no clue on Web3, first align yourself with the principles of what Web3 brings to the table. I think that fundamental alignment is very important, because it becomes very tough to sustain over a long periods of time if that alignment is not there. If you're a founder coming in from Web 2 to Web 3, it's a big change. Because in principle, that entire world is all about private, whereas this world is all about public. So that transition, change is important in the mindset first, and then second is into the ecosystem. Third, you will find, the Web3 ecosystem much more open to work together, much more collaborative to work together, because the ecosystem is smaller. You don't need you will not find too many formal channels to do work. So you got to be ready to operate in different channels of work, and even sometimes an email of an agreement is treated as an agreement versus putting together a formal MOU. So this is a big change that a lot of Web2 founders will find when you're coming into Web3. But once you come in, be assured that you got to move fast, because the technology change is so dramatic that what was a problem statement as long as 6 months ago may not be the same problem statement in the same shape and form. So you got to learn, you got to adapt, You got to move on. So your ability to adapt faster is going to be a constant challenge, and you got to be mentally geared up for that process.
Yeah, I think that is very sound advice for somebody who is like perhaps looking to make a leap here.
Right. And why is it even more exciting today to start? It's just that because in this last 18 months, a lot of founders have gone who have had cash and who have been able to survive, have gone ahead and built out some amazing products and solutions that can help you jumpstart much more faster than what was available 18 months ago. So the no-code platforms have become more robust. You got more analytics tools today on blockchain than they were before. So your ability to jumpstart and build out a product or even build out a narrative, try it out with a bunch of users in different geographies, depending on your use case, is much more easier and accessible today than it was 18 months ago. So pretty much in the case of Web2, it's much more easier to start today than it was 18 months ago. So it's never too late to start a startup, but give it a shot, but give it a shot with full intent and with full sincerity. And there's no reason that you should not meet, why you will not meet with success, with your true insights and understanding of the market.
Absolutely. I think that's wonderful advice, and that's a wonderful way to close off this particular episode as well. Once again, Bimlesh, thank you so much for making out the time to speak to me today. This has been a truly insightful conversation. I'm sure a lot of entrepreneurs will find this very, very insightful and be able to derive a lot of value from it.
Fantastic. Thank you. Thank you, Tarisha. Pleasure. Great questions, great conversations. Look forward to talking to you and having you as a guest on my podcast soon.
Absolutely. Likewise. I would love that. Thank you so much.